Firstly, Mango was created in November 2006 as the first true low-cost carrier in South Africa. We've got a very clear mandate, and that mandate is to get more South Africans to fly. Now, getting more South Africans to fly means we have to reach more South Africans. We must make air travel more accessible to them. And that is a large part of the reason why we're standing here today while talking about F&B's new product. We were further asked or tasked with establishing the lowest cost of operation, to make air travel affordable in South Africa, and to build a brand that people recognize and that they can associate with. Those were our three main objectives when we started Mango in about 20 odd months ago. Right, now the company we've created, we operate the newest, most fuel-efficient fleet, and I was having a chat to Michael earlier today. Operating a fuel-efficient fleet is absolutely key currently to keep ticket prices low. That's why when you go to Mango today, you'll find the lowest cost of air travel is still at Mango, based on the fact that we operate the most fuel-efficient fleet, whilst the fuel price is sitting at levels between $120 a barrel to $147 a barrel. We operate on average 30 flights a day, connecting Cape Town, Bloemfontein, Durban or Johannesburg, and we employ close on 400 people. Now in the last 20 months, what we've managed to achieve is we established the lowest cost base in the industry, in the South African industry. We've done that by pursuing productivity and efficiency. We've got the best ratios in terms of people productivity. As far as aircraft utilization is concerned, we've got the second best ratio globally in terms of number of passengers carried per annum per aircraft. We've helped reduce the cost of air travel. In the short time since our launch, we've managed to carry 2.5 million South Africans, and most of them are people who would really adopt cell phone payment, for example, entry level of the market, and most of them are new travelers, new to the aviation industry. We've achieved a 74% brand recognition rate and won some awards, including Best Low-Cost Carrier in Africa, Best Global Launch Campaign for a new airline globally. And further, we expanded our product offering. We accept and acknowledge that not only leisure people are price sensitive, but businesses are also price sensitive. So SMEs, we're finding more people, companies the size of F&B, making use of low-cost travel in the domestic market. Now, I started off by saying affordability and accessibility. Those are really cornerstones of our business. Accessibility and specific is the reason why we managed to reach 2.5 million people over the last number of months. Now, when it comes to accessibility and reaching our guests, it's not only key from the flown market, but the unflown market in terms of reaching these individuals. All too often people come to the market for a new product, but they're distributed purely through the internet or purely through traditional mechanisms. We took a conscious decision to innovate as far as distribution channels are concerned. In that regard, we've launched a global first, allowing 4.8 million ETIAS-Jet CMA account holders to buy your £300 ticket and pay it off over 12 months if you're in the unbanked session. We promised when we launched that you will buy our tickets together with fruit and veg. So now you can buy our tickets at any one of 600 odd ShopRite Checkers stores around the country. If you're banked but you don't have credit card, and credit card penetration is very low in this market, and that's exactly why this product is really going to take off. If you don't have credit card, we've launched a product that allows you to do automated EFT payments, which again is a first in the country. We also allow you to mix and match. You can pay with vouchers, you can pay with cash, you can pay with credit card, you can mix it in one transaction. So it's all about accessibility and flexibility in the hand of the consumer. In line with our focus on cost reduction, we're the first carrier, low-cost carrier in Africa to use automated self-service kiosk check-in. So when you get to the airport, you just go to the kiosk, no point in joining a long queue, go to the kiosk, get your boarding pass, and off you go. We also last week launched web check-in. Innovation ultimately benefits our guests and it benefits Mango as a business enterprise. If we look at the automation component, through the self-service check-in, about 35% of our customers, our guests, check in using self-service kiosks. That has increased and improved the average processing time within the airport environment and has allowed us to be consistently the best performing airline as far as on-time departures. As far as the wide distribution net is concerned, accessibility and convenience. Air travel in the short-haul market isn't really fun. Most people see it as a task, as a necessary evil. So if you can make it easier for people to gain access to overall transaction from buying the ticket to getting off on the other side, it adds to consumer and our guests' convenience. And then the array of payment options and alternatives. Whether you've got cash, credit, a mobile phone, it makes it easy to get to Mango's tickets. All too often people get into a technology environment where they end up chasing technology for the sake of technology. So innovation is, yes, it's key, it's important, but innovation without adoption means absolutely nothing. It's a real partnership that has to exist there. So now talking about the partnership with FNB as far as self-payment is concerned. When we evaluate a new channel, we firstly look at three key criteria. The need, the innovation, the enabler, is the technology there or can it be made to be there? And then what is the likely level of adoption? So if we evaluate self-pay points along those three dimensions, we see that for banks, consumers and merchants all want a better banking system, a better way of getting cash in bank. If you look at credit cards, for example, credit cards in South Africa is prone to fraud, the penetration level is fairly low, and it's typically an expensive transaction. Relatively low levels of internet penetration makes it even more difficult when it comes to internet banking as a pure reliance relying on internet banking. Although the adoption levels are there, the universe of people are small. They ultimately end up being left with cash as an option. Banks don't like processing cash, we don't like processing cash, and the consumer don't like carrying lots of cash around. So it's clear that the need for innovation as far as payment channels are concerned exists today, and it's a very real. When I look at the underlying technology, cell phones with technology is a mature channel and is all pervasive. It's been in use for decades. It's in the hands of our consumers. I read a stat that we're sitting at a penetration of 83% of South Africans have got a cell phone in their hands. It's cost effective. The rollout of cell phones was so successful in South Africa because of its cost efficiency. The capacity to create the capacity is so much cheaper than fixed line creation of capacity. That's why cell phones are becoming more and more the preferred option for data transmission vis-a-vis fixed line transmission. So the first two dimensions in terms of needs and whether or not the technology is suitable, self-pay point gets a huge tick. Now, as far as adoption is concerned, I would put forward that no technology to date has been accepted and adopted by South Africans as mobile phones. 83% of South Africans having access to a mobile phone. I can assure you that the access to the internet is much lower. South Africans have just taken to it like you can't believe. It's not just talking about communication. Half of the people in this room would today at some point probably refer to their mobile phone to check their email. Half of you may have kids who would be sitting on Mixer today, so it's a social interaction platform. Mobile telephony has transcended the barriers and its original function for which it was designed. So therefore, mobile telephony and mobile phones as a platform gets ticks on every single one of these three dimensions. So mobile telephony and commonplace mobile transactivity is possible, practical, acceptable, and therefore very, very logical. When I look at FNB as a partner, FNB is an obvious choice. They're a proven innovator, they've got a respected brand, and we really look forward to, not only in this initiative, but in other initiatives to come, to work with FNB and to get South Africans to fly more. And we thank FNB for this opportunity, and we're really looking forward to the success.